CTV's, or BNN Bloomberg's rather, Paul Bagnell joins us now with more. Good morning to you, Paul. So walk us through these numbers. What do they indicate?
Well, for Canadians who would like to see the Bank of Canada, Marcia, cut its benchmark interest rate again, there's nothing here that would suggest that the bank will do that the next time it makes a rate or policy announcement. The numbers were almost exactly how economists had expected them to be, and the big one from the Bank of Canada's point of view is core inflation. That's inflation when you remove volatile items from the consumer price index basket of goods and services. Those volatile items are typically food items and fuel items. And that number, core inflation, two measures of core inflation, remain steady, or I should say declined from April, but still remain persistently high at 3.0%. That's higher than the bank wants to see it. And we spoke to an economist as soon as those numbers are released. And while he does expect the Bank of Canada to cut its benchmark interest rate later this year, it won't come during July, according to our guest, because of the numbers today. There's not enough downward pressure on core inflation to make the bank comfortable that it can reduce its benchmark interest rate again without giving a boost to stubbornly persistent inflation.
Okay, so we're likely looking at another one of those stand-pat situations.
Correct.
Okay. Before you go, can you talk to us about the price of oil? I think the fact that we haven't seen a big swing either way has surprised many. Talk to us about what you're seeing with oil and what you're hearing from experts on where it could go given the conflict in the Middle East.
Well, first of all, I would say that geopolitical tensions in the Middle East have an effect on the price of crude oil, but it's usually a temporary effect. Secondly, the big factor to watch is the Strait of Hormuz, the key shipping lane in the Middle East. I have not heard anything suggesting that the flow of oil through the Strait of Hormuz has been impaired by the conflict at all. Last week there was actually a collision between two freighters, and one of them caught on fire. That was a relatively serious incident. I assume it had some effect on the flow of oil out of the strait, but it was not related to the conflict, and that has been settled by cleaned up by now. That collision by the two freighters, and the other factor in the background, Marcia, is that many people who watch the oil market closely believe that the market is, if not oversupplied, at least fully supplied. They see the supply-demand balance, which is the real driver of oil, as being tilted in favor of supply right now. In other words, demand is wobbly because of uncertainty about the strength of the global economy. Supply is ample, and that has produced certainly oil prices today that are lower than they were a year ago. And when it looks like a truce may be in place, or a de-escalation between Israel and Iran, that traders are quick to sell down oil on that basis because of the underlying supply-demand fundamentals, which seem to favor lower prices.
Got it. Thank you very much. And we just saw the markets were up as well in positive territory this morning. Always great to see you. BNN Bloomberg's Paul Bagnell for us this morning.